Analysts are upbeat about the country's economic growth trajectory as Finance Minister Enoch Godongwana prepares to deliver the 2026 national budget. Now, the positive sentiment is supported by the country's removal from the Financial Action Task Force's grey list, 4 consecutive quarters of economic growth since September 2024, as well as a sovereign credit rating upgrade for the first time in 20 years. Now, all of this is in line with the government's own commitment towards its structural reform agenda, which is expected to sustain and stimulate growth in the medium to long-term future.
I mean, if we look at forecast agencies, the likes of the IMF and other agencies, even the National Treasury's numbers, we'll be seeing that real GDP growth in the medium term, the next 3, 4, 5 years, is probably going to reach about 2%, right? And this is largely driven by some of the cyclical factors that we are seeing in the global economy, also in our economy, linked to, for example, interest rates, inflation, commodity prices, etc., but certainly also the structural transformation that we're seeing. But I think by its very nature, the challenge is that structural reforms and those things that have held us back in the past take time, to implement. I think what we've seen with Operation Vulindlela in particular is that we have momentum.
Another welcome feature of this year's budget is an anticipated primary budget surplus. This essentially means that government revenue collections exceeded non-interest spending. This is, of course, in line with government's efforts to reduce and stabilize debt at around 78% of GDP this year. A lower debt burden means that government is able to increase funding towards other priority areas such as education, policing, health, and infrastructure, among others.
Initially, the minister had proposed that they will have a shortfall of, I think, 20 billion. But in November, it was interesting to see that the commissioner was saying they're actually ahead by 18 billion. They were at a surplus by 18 billion. That shows the amount of work that they've been doing around any budget that they have from the government. In my view, they will continue to, I don't think they'll have new taxes or increase. I don't anticipate that they'll have high taxes from a corporate tax increase, but I do believe they will continue to make sure that the methods that they're using to collect, they will strengthen that. They will make sure that they continue to employ skilled people. They will make sure that the technology around getting data, analyzing data, they'll strengthen their opportunities there. Probably around employee taxes or individual taxes, even there, I do anticipate that they might have inflationary increases.
Now, last year's budget was clouded by uncertainty, characterized by multiple iterations of the budget, as members within the Government of National Unity could not reach an agreement over a proposed value-added tax increase. Now, the sentiment is much more positive this time around, following the reforms to the budget consultation process, while government has also managed to collect more in revenue than it previously expected.
The one thing that I think gives me a sense of policy or some level of alignment is on the issues that we've been discussing around economic reforms and so on. And I expect that there should be continuous alignment on what are the economic reforms. There will be these policy or let's say political party policy issues that we must accept will remain an issue going forward. But I do believe that there's more of an appetite from the GNU to listen to each other.
Now, the recent commodity price boom is expected to boost revenue through corporate income tax. However, where this money will be spent is still unclear. The answer to that question will come from the Finance Minister when he tables the 2026 budget in Parliament at 2 p.m. on the 25th of February. Naledi Mabitsela Ngcobo for SABC News in Johannesburg.